of February. Just having a quick look at the broader context of how the markets look this morning. Not a great deal of movement. The dollar a touch firmer, up around 0.15%. The dollar index still remaining above that kind of psychological 100 level. So a little bit lower in both pairs. Maybe some slight underperformance in the euro currency. Still, you could say some lingering political fears, which seem to have stepped up a little bit this week, certainly with the French situation. You've probably seen the latest headlines yesterday. Some allegations now. We've kind of moved from Fillon, and now the press are targeting Macron with talk of an affair with the head of the Radio France. I would be expecting probably more of these types of mudslinging to go on all the way up till the first round of voting. It's kind of the same case wherever you go in the world in terms of the strategy of the press, I guess, targeting these sorts of things. But elsewhere, things otherwise pretty quiet overall. The S&P, in fact, has now closed in terms of the cash market in the US with a move up or down of less than 0.1% for the sixth time in the last 9 sessions, with generally lower volume as well. So certainly hasn't, in the equity space, been a great deal of action in US equities. But what we have seen is that maybe FX has certainly offered up more opportunity so far this week, and we're going to have a quick look at sterling, which saw a pretty phenomenal recovery into the European close yesterday and thereafter. A quick look as well, you can see oil prices are down already 55 cents this morning. So let's really just have a quick look at that, because that was quite a big headline that developed overnight. So you can see here we were already on the continuation of a trend lower through yesterday's session. Yesterday predominantly was a day of a stronger dollar, which may have weighed on prices. And then we had a big shift lower at 9:30 last night. So just transitioning here to a 5-minute candlestick so you can really see this move. And usually the API crude oil inventory numbers, which come out in the evening after the close, are really minimal impact. Even if they're a fairly sizable number, I would say a kind of 20-cent move is a bit more regular with an API inventory report. However, last night, as you can see, we moved from around 52 kind of 20 all the way down to lows seen within about an hour and a half of the release, 2 hours, down to 51.20. So I must say there's not many occasions I've seen the API inventory numbers move the market to that sort of size. So why did this occur? Well, you've probably read the headlines by now, but just to quickly recap, essentially you had the second largest weekly build in US history in the headline figure. What does that look like? Well, it looks like a plus 14.27 million print, where expectations were for just 2.5 million. So, you know, when I talk about looking for an outlier when it comes to against or what would cause the most cleanest price reaction and to a larger scale, you know, there's not often you see that kind of discrepancy between a consensus estimate and an actual number. The gasoline figure as well was a 6 weekly build we've had on that figure, just adding to the bearish sentiment. Builds also in Cushing, just over 500,000, and distillates 1.3 million. So if you go back to, well, really looking at the headline crude figures, you know, you'd have to go back really to September time, when we last saw that in the DOE numbers up and around these levels. But then again, it's pretty much the second largest build that we've ever seen, basically. So we've had a bit of recovery in prices. We've pretty retraced about 40% of that move, but certainly this does set the scene for the Department of Energy's crude oil inventory data later. I would say then, actually I'd say the risk is for a bounce back higher in prices, if all things being equal, because the DOE numbers now will react to the market expectation of a similar type headline reading, which would be pretty phenomenal if it can print that size again with a build of 14-15 million. So I'd say the bar has been set quite high in order for the DOE report to then knock the price back down again, if that makes sense, given that number is so punchy on the upside. So that'll be interesting. Also as well, with that sharper move lower overnight, probably what also helped, you can see here the price action, if I'm just kind of mark it up here, it's around that 51.60 level you can see was the initial run lower. If you start drawing the chart out to the 2017 performance, really it's around that 51.60 level where it was defining the bottom of the range that we've seen so far this year. So likelihood, once it was a catalyst to push the price lower, technically it gets below those levels, and then you get the kind of extended move as well, and also with Asian participants also reacting to the news, and then we get a bit of a push lower. We've hence then, having marked up that level, come all the way back to that level again. You can see, broke it, comes back, tests it, late Asian session again, Europe comes in, lifts it, and then it comes back to now act as support. So that level was kind of significant because it marked that earlier low for the year. So as yet, no sustained test on 51, but certainly if the numbers can follow suit, we'll be looking at that later when the DOE numbers come out. So that's your crude story. The other one of note though was the British pound yesterday. Quite a phenomenal day really for price movement, because a real story of two halves, if you like. We got hit fairly hard in the morning. The dollar was seeing a pretty decent move to the upside, so both major currency pairs in euro, dollar and cable were under pressure. If I start to draw the chart out a little bit, you can see that really there's this kind of band of price action between 124.30 and 50 that was defining the well, again, 2017 price movement. We broke that low from the 24th at 24.31. That was where it got close to testing before bouncing on the 6th, and then yesterday morning, pretty much as the volume picked up as UK and European traders came into the market, triggered a flush lower there amid the dollar strength and the technical break. So it was quite an extended move lower through 124 handle. However, as the session progressed, we made a really nice bounce and added some more even on that to where we were in yesterday's Asia Pac session. Now a couple of factors here. One, you had the parliamentary concession, if you like, from the government, in that Theresa May basically ratified what she said in her speech about 2 weeks ago, and that Parliament will have a say in any final deal. So that was a sterling positive. You then had that Christine Forbes comment as well, you could add in the mix, where she was hawkish. Her comments were that she's growing uncomfortable with the recent growth and inflation trade-off, and that if the real economy remains solid and the pickup in nominal data continues, this could suggest an increase in the bank rate. Now we did see that immediately shoot high on the back of her comments. It pulled back slightly because ultimately she is a hawk. These are unsurprising, but when in combination with some of these other factors, again it was another reason for the pound to push higher. You then had the trade balance data as well, simultaneously coming out of the States. That prompted the forecasts for US forward-looking GDP expectations for Q1 to be revised substantially lower in the Atlanta Fed GDP tracker, which is often seen as the kind of bellwether indicator for the most up-to-date reading on how latest economic data is influencing those forecasts, which is correlated then with general performance of GDP measures when they come out officially later on down the line. So that prompted a bit of a pullback in the dollar at the time where you had these sterling positive factors, and then given the fact as well this was coming really as Europe was leaving the market, generally lighter volumes helping exacerbate the move, and you had this really powerful move to the upside. And then there we've kind of stayed ever since that point. So net we're just above where we were before a lot of the price action yesterday, but certainly a lot of movement there. And obviously I'd still be keeping a half an ear out for any updates on that situation with the vote later this evening, but it seems to be a bit of a foregone conclusion now with that report from yesterday. Quick look at the euro as well, very much a similar kind of story, I guess. You had that test on the 6th on Monday where we bounced off 107.19.5, so when we tested that and the respective S1 level, it broke lower, came back to test that exact level in which it broke the day, provided support the day before, and then we made a concerted move to the downside. And then looking this morning, we found, after initial tests, some support on S1 again today. So not too much movement though in the currencies overall. The dollar, as I say, is a little bit firmer, but no real aggressive move seen thus far this morning. A couple of other things though quickly I just want to get you up to speed on from a news perspective. And one is, well, really it's this UK parliamentary story from yesterday. So just quickly, what that meant was that Theresa May yesterday contained a Tory rebellion over Brexit by promising MPs a take it or leave it vote on the final draft of any EU exit agreement, a commitment initially hailed by Labour as a huge concession. The vote itself 326 to 293 on the Labour amendments that would have stopped ministers striking a Brexit deal until it has been approved by MPs and peers. So that's kind of been validated now, and that is a net, I'd say, positive in terms of the pound, and that's again one of the factors that helped out yesterday. The interesting thing though here is we talked a lot about France the last 2 days, and about what it might mean about Le Pen. We were discussing yesterday, even if she did win, it would be difficult for her to pursue the mandate or manifesto of the quite aggressive pledges that she's been putting forth. And what's quite interesting is that I'm going to have a quick chat about the Dutch elections, and then we'll draw back to this parliamentary decision or this change that we've had from Theresa May yesterday. So quickly then, just looking at the Dutch situation. So it's not Frexit, now we're talking Nexit. So keep up to your speeds with your exits. This is about basically, well, I mean, talking to peers briefly about this morning, it does kind of summarise Europe really, because as you're about to see from what I'm going to talk about, you're talking about a five-way possible coalition government in the Netherlands, and this kind of really is a typical case amongst quite a lot of Europe. Obviously trying to govern so many countries as an ideology is particularly difficult. Maybe it's this over bureaucracy that kind of causes this, it's almost like trying to steer the Titanic when it comes to reform policies in the Eurozone, which is why a lot of people are disgruntled or unhappy with that. But looking at the Netherlands in summary, there's a chap who's, well, let's say he's quite unique looking. He's probably a guy you're going to see more often if I just bring him up. So this chap, Geert Wilders, kind of reminds me of the guy out of Blade. The guy that, you remember that film Blade? Wesley Snipes, and that guy that helps him out kind of looks a bit like him. But this is a guy you're probably going to see much more of going forward. And he basically represents the far-right Freedom Party. And if you were to go by polls, let me just make this a bit bigger, you can see on the right-hand side, his party is the PVV, and it's the red line. And you can see they're sharply outperforming all of the other parties at the moment. Now this is important because they've got their elections on the 15th of March. So this does come ahead of the first round of the French elections, which are coming at the end of April. Now, this is a really good summary just from the guys at Danske Bank. They're basically saying that they do not think the PVV will be able to form a government since other parties have ruled out forming a coalition with it. So this is a really critical point. Basically, much like all the other situations in France that we discussed with Le Pen yesterday, was the fact that even though she would be able to go up to projected seats in the National Assembly of around 58 to 64 from 2, she still is a far cry from having any type of majority in parliament, and therefore she would need to form a coalition with a majority partner, i.e. that would most likely be centre-right, possibly François Fillon, and then that would lead to tying her hands on the policy she'd want to put forth. It's a very similar situation in the Netherlands. So basically the PVV would have to form a coalition government. The only problem is every other party in the Netherlands has been pretty forthright saying we won't form a government coalition with you. Now all this means is that ultimately if the PVV do win, that they will have to basically negotiate, probably come back from some of their more far-reaching right policies in order to then appease other parties in order to form a coalition government. So the government, the new one, will likely consist of a coalition of at least 5 centre-right and centre-left parties. So incredibly difficult then, I think, to have any type of real quick movement in Dutch politics on the back of this. Even if the PVV are somehow able to gain sufficient seats to form a government, it'd be very difficult to hold a referendum on EU membership. Feels like deja vu here, because a referendum in the Netherlands is only advisory. As such, the referendum for Brexit, as we know, and also like France, it cannot happen without changes to current legislation. A binding referendum on EU exit cannot be held. So the point being here is that although the probability of a PVV government is low, investor sentiment is unlikely to remain complacent, and some risk premium should be included when the election date draws near. This was really the take-home point of what I was trying to get across yesterday, was that although actually when you peel back the layers, the legal complexities and also politically with this coalition formations is going to make actually a lot of this cajoling of more far-right sentiment or populist movement very difficult to actually action in reality. That does not mean though that you're going to get increased uncertainty equating to volatility and maybe widening of the respective bond yield spreads going into the actual vote, because that's when the press will be at its most ferocious to kind of pump the story. That will probably lead to potentially some euro weakness, some local domestic equity weakness in their local markets and so on. However, again, there's the pre-election trade strategy, and I think there's definitely a post-election when people get over the fanfare that is this kind of situation at the moment. Now this is very interesting because the one country, of course, we can see that's a bit of a template for this was obviously Brexit and Britain. And then circling back to this first story is you had Brexit, we voted to leave the EU, however already you're starting to see concessions on the side of the hard Brexit line of the government. So again, this is kind of now what I think you'll probably have, even if Le Pen wins, even if Geert Wilders wins of the PVV in Netherlands, is a similar situation. You have kind of panic, and then actually when you get down to this being spoken about in Parliament, it starts to you start to get concessions, which is exactly what you're starting to see now in the case of the UK, in order for them to push through and actually get the job done. So yeah, definitely hopefully that was an update. I did send that Danske Bank report on the Dutch situation out to you. I do suggest you take a read if you have a moment, just to get you up to speed. It's only a short document. The other things interesting here, as you can see, the upper house party distribution makes an exit vote unlikely as well to be passed. So again, it's the complication about the number of parties and the splits that they'll have will make it very difficult for any far right party to actually push through policies. Okay, quickly moving on, just looking at the session for today. It is a particularly quiet day. Markets aren't really seeing much movement at this present point, so I just suggest a degree of discipline this morning until possibly the US start to come in. You might start to see things again on the volume side help spark things to life. Obviously yesterday at the open of Wall Street, We opened up in the cash at record all-time highs again in the Dow and the Nasdaq. We're still sitting pretty close proximity of that in terms of how the futures are positioned as well at the moment. The Bank of England's agent summary of business conditions, that comes out at 9:30 this morning. For any of you who are not familiar with what that is, essentially it's kind of the UK's version, I guess, of the Beige Book, which is a regional breakdown of economic performance across different parts of the UK. It very, very rarely has any impact on the market, but I would say, just given some of the focus on inflation from a policy perspective, maybe quite interested to see what the agents pick up on a regional basis on their thoughts that they've got back on inflation going forward. And then later on this afternoon, no real major US data of significance, but you do have the Department of Energy numbers, and given that kind of second largest build in US history for the API inventories last night and the headline crude figure, definitely be watching out for that. And then later on this evening, for any of those who trade in FX and Kiwi, you've got the RBNZ interest rate decision, but not looking for any actual change in rates when that comes out later this evening. There is actually one speaker to add on here which isn't on there. If I just flick over to the Bank of England website, I was showing some of the guys, newer guys, this yesterday, but if you ever are wanting to do your due diligence as a sterling trader every morning, if you just jump on the Bank of England website, this is the main homepage, and on the right hand side basically you have forthcoming events, which is the next scheduled speeches. And as you can see here, you've got John Cunliffe, who's actually the Deputy Governor, a speech at the Greater Birmingham Chambers of Commerce during an agency visit to the West Midlands. Text will be released. That'll be at 1 o'clock. Now, as a Deputy Governor, Cunliffe tends to be more centre-leaning in terms of policy views, so certainly not expecting anything quite so brash as what we heard from Christine Forbes, which is this lady, yesterday. But just be aware of that at 1 o'clock to add in addition on your calendars. Okay, that's the morning briefing. Going to leave it at that. So I'll see you in the chat room and enjoy your session. Thanks, guys.